Hello and welcome back everyone. I'm CA Harsh Mehta and today we'll discuss about the company Bajaj Finance, its business model and its financial analysis. So let's start with it. First we have the content slide. I'll discuss about its history, timelines, business model, right up to the financials and SWOT analysis. So let's start with its history first. 1987. It was an era when you had to wait for the delivery of your two wheelers and four wheelers. Maybe 1 month, 2 months, or even 6 months. And the day you get your car, it is celebrated as a festival in the family. The car was not treated just as a car back then, it was a family member. But it was still a dream for many to own a vehicle as they couldn't afford to pay such a big amount at one go and there was no easy credit available back then. This is when Bajaj, who was the leader in two-wheeler market and in the business for past 40 years, decided to start a two and three-wheeler financing company, Bajaj Auto Finance Limited, which also complemented its existing business and drove the sales of the two-wheelers and three-wheelers. Now, credit was available with public and they could buy a vehicle and pay for it as per their convenience. They plugged the exact place that was the need of the hour, and as they fulfilled a need, there was no turning back. And slowly, they started expanding their financing business with bill discounting, leasing of equipments and vehicles, consumer finance like electricals, and other household finance, and many, many more. Let's look at the timeline of the company. 1987, the year when it all began. It was incorporated as Bajaj Auto Finance Limited, and in the same year, it further expanded into leasing of equipment and vehicle business. In the year 1992, it further expanded into bill discounting business. Year 1999, it entered into durable finance, that is, household goods and electronics businesses. Year 2000, it reached the feat of annual disbursements of rupees 500 crores. In 2006, it further expanded into property loans and reached a feat of annual disbursements of 1,000 crores. In the year 2010, the company was renamed to Bajaj Finance Limited as we know it now. In the year 2012, it introduced EMI card and FlexiSaver. EMI card has been loved by the masses and is still a very popular item among consumer durables. In the year 2016, it further ventured into life care financing, where it gives finances for the operations and healthcare facilities. In 2018, it reached the feat of asset under management of 78,000 crores, and it also commenced a new subsidiary with the name of Bajaj Housing Finance Limited and further expanded its businesses. In the year 2019, it commenced a new broking arm, Bajaj Financial Securities Limited, and it is the latest addition in its portfolio. In the year 2020, in July, Rahul Bajaj, who was the long-time chairman since its inception, stepped down and continues to be a non-executive director of the company. Sanjeev Bajaj, who is the son of Rahul Bajaj, takes over the reins from his father. Now, let's discuss the leadership structure of the company. The company was commenced by Mr. Rahul Bajaj, who roped in Mr. Nanu Parmani, who had good experience in the industry and was a dear friend of Rahul Bajaj. Nanu died unexpectedly in February 2020, and Rahul Bajaj also stepped down from the chairmanship in July 2020. Uh, but he continues to be a non executive director of the company. So, the two most important pillars of the company, who were a part of the growth of the company, are no longer at the core of the company. Sanjeev Bajaj, who is son of Rahul Bajaj, took the reins and was named as the chairman of the company. He has been a part of the company for a fairly long period of time now. Rajiv Jain, who is part of the company for about a decade now, and with good experience in finance industry, continues to be the managing director of the company. Now, let's discuss about the organization structure of the company. Bajaj Finance Limited has two fully owned subsidiaries, which are the latest additions in the portfolio and are still in infant stages. Bajaj Housing Finance Limited is engaged in housing finance business. It started its operations in the year 2018. Bajaj Financial Securities Limited is the latest branch. It started its operation in 2019 and it is a broking arm of the firm. There are many streams through which BFL earns, though all of which can be broadly categorized under financing. The subsegments of them are: the very first one is consumer lending. This includes financing the consumer durables like electronics, furniture, e-commerce purchases, auto finance, daily spends, etc. This forms one of the biggest share of the company, and Bajaj is one of the leading names in this industry. It is also showing strong growth and is growing market with the new generation mentality. The second one are the personal loans. These are made available to existing consumers. They are pre-approved unsecured loans to customers with good track records of repayment. The third one is SME lending. This again is a rising market, and these are the working capital loans and term loans to small businesses and professionals like CA, lawyers, doctors, etc. The next segment is rural lending. This is fairly a new initiative by the company of lending to small towns and villages. This segment is now showing phenomenal growth and good results to the company. The next segment is commercial lending. This includes wide array of products like loan against securities, loan to financial institutions and other industries, gold loans, etc. The next we have are deposits. BFL accepts deposits from public in exchange of interest on those deposits. They are a more cheaper source of financing for the company and they are growing at a very high rate, which is good for the company. The next we have are partnerships. Bajaj Finance has partnerships with various financial service providers with whom it offers various services like life insurance, health insurance, extended warranty, co-branded credit cards, etc. Then we have housing finance. It is again relatively a new venture started in 2018 for home loans and other related finances. It has become one of the biggest segments and continues to grow at an abnormal. Next we have is the broking arm. This is the latest addition to its portfolio. Started in 2019, it is still in its infant stage and we can expect good returns from it in future. Now, let's discuss the segment share of asset under management of the company. Asset under management has shown abnormal growth of 35% during last 5 years and it stands at 1,37,000 crores as at 30th September 2020. Now, as we can see, mortgages and consumer lending own the majority portion of the segment share of the company. Auto finance, which was the only share back in 1987 when it started, is only 9% of all asset under managements now. That shows that the company has expanded into wide array of new segments. The other three segments, the commercial lending, rural lending, and SME business, are fairly new and can be and are growing at a phenomenal rate. And these can be key contributors in future in increasing the pie for the company. As we can see, profit after tax has been showing good growth year on year up to March 20 and has been impacted in September quarter due to COVID-19, but so has the profits of all other companies and businesses. Looking at the FY20 numbers, Bajaj Finance Limited has shown a healthy growth of 25%, and Housing Finance arm, as I said, is a new venture and is showing abnormal growth. It has been 283% up year on year and continues to grow exponentially. BFSL has just started its operations and so it is yet to show results, but we can expect good profits from it in future. NPA or non-performing assets of BFL are within comfortable limits and are decreasing quarter on quarter, showing improvement in asset quality. But couple of things to watch out for here is that Supreme Court had ordered to all the financing companies and banks to not classify any asset as NPA after 31st August 2020 till further notice. And the second thing to consider is that this number might increase in coming quarters as a impact of defaults rising because of COVID-19. There are various sources of this funding. The majority of the funds comes from borrowings and debt, which are external source and are considered to be more expensive source of finance. Deposits are again external source of finance, but are considered a cheaper source of finance, and the cost is deposits is going down year on year. As deposits are showing a strong growth, it is a positive point for the company. Retained earnings are a source of internal finance, and higher its ratio, the better it is for the company. One thing to understand here is that PFL is a financing company and it needs money to lend money. Also, it is in its growth stage. Both of these factors are the reason for its such high debt balance. Now, let's analyze the financial numbers of the company. The share is trading at 3278 as at close of 30th September 2020. As compared to a normal company, the valuations of the company are a bit rich. A PE of 44 and a PB of 6.15 is much higher as compared to a normal company. But this company is a growth company showing a growth of more than 20% in PAT year on year, excluding this abnormal 2 quarters which were impacted because of COVID, and hence are the reason for this valuation, which is also proved by low dividend yield as money is opted to be reinvested in the business instead of distributing as dividend. Net profit margin of 20% is low for a financing company, but as you can make out from the return on equity and return on capital employed, the company is earning a healthy 45% of ROCE, but a business gives out a chunk of its profits as interest because of its high debt, leaving only a third for equity shareholders. A debt equity and interest coverage ratios also are in line with our previous analysis and depicts that the company has very high debt, which in the long run would not be good for business. Let's do a SWOT analysis of the company. Some of its strengths are the increasing cash flow and EPS of the company. Profit after tax has been growing at a stellar CAGR of 40% during last 5 years. At its heart of the management is the constant innovation, be it EMI card, durable finance, rural lending, etc., which is good for the company in the long run. Let's discuss some of its weaknesses. The very first and the biggest weakness it has is its high debt, which is eating up a lot of its profits. And it cannot sustain for a long period of time, but will be an integral part for the growth of the company. Some of the opportunities that it has are the expansion and results of its new arms. which are yet to be seen and yet to be experienced. Also, the rural lending segment is showing good results now and is growing at a good and abnormal rate. The only threat it has is its high PE of more than 40, which is not sustainable in the long run and would come down with the increase in the earnings of the company. So, that was a complete dissection of PFL and its business model and analysis. And in my personal view, it is a really good bet with bright future, and who knows if it converts into a bank in future, and it has many more possibilities and opportunities ahead. Thank you.